join me to give the warmest round of applause because he really fly back just for this, right? To welcome my good friend, my fellow podcast friend from YouTube, Ken Tang, also known as Chicken Genius. Round of applause, please, everybody.
Thanks for the invite.
Take a seat. Yeah. Okay, so how it's going to function is this, right? I catch up with him yesterday just to talk about this event. Gracefully, I just wanted him to share his perspective, but he actually took his time off to prepare something to share. Isn't that amazing, guys? Please give him a round of applause, guys. It really put his time. Hours and hours of research combined together, right, to really present a perspective that I think is very interesting for everybody to hear about the current climate as well. So thank you, Ken, for doing this. We will be, like you guys, part of this, right? And we'll be asking questions and we'll follow as he'll be presenting. Would that be okay, guys? About his facts and what's going to happen to the macro of the world.
All right, thanks, Benny and Ivan, for the invite, and hi, everybody.
Wow, your hello is louder than us.
Really? Anyway, I'm very excited to see you guys in person. It's so much better than on the screen itself. So anyway,
actually, Ken himself is also a real estate investor all the way from the past as well. And a fun fact that people don't know, he was actually in one of the PIM in the past before. I think it was PIM batch
5.
What's PIM? What's PIM?
PIM.
In the main property program that you have set
your class.
In the industrial property.
Yeah. So long ago.
Yeah.
So long ago, right? So Ken was batch 5, being with us as well. My very sad story and last introduction line of Ken was, he told me to invest in Tesla, and the next sentence he said, I blame it on you still. You say, I say, what is Tesla? Oh, the guy built rocket, show up, and then come back down and say, the one, too xiao already, I don't understand. That I probably could have 100x during that point when they tell me to invest, I didn't do so as well. So, very sad truth. But
anyway, it's all right. So there's a lot of opportunities in the market. Every year it presents itself new opportunities. You know, I just came back from Japan. Guys, guess where I just came back from? Which state of Japan?
Shout out.
Just shout out.
Okay, Osaka,
Tokyo. Yeah, I flew back from Osaka, but you know, I brought this with me. You know what's this? This is a radiation meter.
Wow.
So I just came back from Fukushima.
Whoa.
So anyway,
does it help in investing? This will check because I might want to go if it helps.
No, I brought this here because later I'm going to probably like chit chat all of you all, and just to prove to you I'm safe. If not, this thing will start buzzing. So anyway, I can't tell you exactly why I was there. Maybe you will know in about 1 month's time. But it was a very interesting experience, and I can tell you, like, whatever you see on the news, like you were talking about the news just now, you do not need to worry. It is 100% safe, and I'll actually argue that Japan is safer than Singapore. Right, so no worries, go there. The yen is at all-time low. It's like banana money. Just go there and buy, all right? Just go Japan and enjoy yourself. And probably, I think this year, I think there's some kind of bottoming of the yen. It might go up because the Japan central banks kind of start to defend the yen versus their bonds.
Actually, Japan will be a very interesting talking point when it comes to what you're going to present today.
Yeah.
So strange that we just went to Japan and come back.
Yeah.
That's one of the key big market that we are looking at, not for real estate investment, but as an indicator of the macroeconomic.
Yeah. All right, so let's start. So why do I say this is a new era of money? Something happened back in this year, March 2023. Can you guys guess what happened? Come on. Just guess. Something happened in March 2023. It was a very big shift. It's a very big pivot point. So just guess something. It was a big event. Everybody heard of it, I'm pretty sure, on the news. That's right?
There's somebody say war.
Let me walk down here. I can't hear. Just shout out your answers. War? War was later in that. Okay, let me it has to do with one of the biggest banks in America. I hear a lot. Okay, so this is March 2023, Silicon Valley Bank, one of the biggest banks in US failed. And what happened? Nothing. So coming from, I was really bearish in 2022, and you see all the prices start going down. You see like interest rates high up. And when something like that big happen, there's a fundamental shift, and I need to practice some kind of mental flexibility to kind of like change my mindset on what's going on next. So this is where I'll present to you what's going to happen in the next 10 years. It's going to be very, very different. And this is generally talking about the US markets, and you kind of flow down to the rest of the world. Okay, so there's this thing in March 2023 that happened. It's called the Bank Term Funding Program, BTFP in short. It's something like stealth QE. It's like stealth increase of balance sheet. So you don't actually know it happens, but it happens. So this has changed everything. Okay, anyway, just I know most of you follow my YouTube, but actually most of my content right now is on X. Why my content is on X? So
X is in Twitter. X.
Twitter. Because basically the whole finance world has moved to X. Like for example, you guys watch the All In podcast, one of my favorite podcasts I watch every week. Like we've had billionaires talking on top few podcasts in the world. They get 10 times the views on X versus YouTube. And YouTube finance is dead. The entertainment scene is fine, but most of the quality content is on X, and that's where I share my thoughts, and most of my content are. And that's also one of the times where, like a month ago, I reviewed a $600,000 portfolio, a public portfolio, and every trade could be seen from there. I share my trades, everything. And in 5 weeks, I brought it up $400,000. So from 600K to $1 million. And it's still going up right now. So just follow me on X to get some more updates, less content on YouTube now. All right? So let's go on to this chart. This chart represents, it's a very simple macroeconomics chart, which is M2, that means the total supply of money. And if you look at like a 100-year view, you notice that we are in some sort of an asset bubble. Do you agree with me? I mean, if you look at a long-term chart, it's like a big asset bubble. Am I in the right place? Okay. Yeah, okay. Yeah, in some sort of asset bubble, you see.
Take the stand away. Yeah, it's blocking the screen. Yeah, thank you. Yeah.
Thanks, Chewy, my co-host in Cafe Money.
Everyone give you a round of applause.
Okay, so if you look at like assets, right? Assets, everything is like a big slope up. And this is, we call that, a lot of people like to call that in mainstream media, the biggest asset bubble of all time. And I would like to ask you this question. If you're in the biggest asset bubble of all times, there's only two outcomes can happen. One, will the government let it burst, or the government will not let it burst? There's only two outcomes coming from this. And because what we saw in March 2023, we know the definite answer is the government is not going to let the asset bubble burst. It's very simple as that. Right, so how do we move on from here?
Why do you think the government would not let the asset bubble burst?
The actions of BTFP happened in March 2023. Like, I thought the whole market will crash, the market will reset back in like 08, 09. The central banks were like hard talking about, we're going to defend inflation, we'll do everything. But what they say and their actions are really opposite. So I rather see, like you guys also, you watch actions rather than all the mainstream news. So these are the actions. And they have been proving this action over and over again. In fact, since this happened, we have been having a stealth QE, injecting the balance sheet at the back, where you actually do see that there isn't a, what we call it, quantitative tightening effect, that there just isn't anymore now, right? Okay.
So I mean, just for people to know, QE, in short, is printing money.
Yeah, QE is printing money.
It's just printing money.
Yeah, so this is stealth printing money. So right now, the consensus of the markets is a flash crash like the 08, 09 and the dot-com. These memories are still fresh. So this is the market consensus right now. And The next consensus is for stocks. It's been going up for the past 100 years, so just buy law. Just buy, deep, just buy. Okay, so this is the consensus of the market right now. Do you like agree with me on this consensus? Yeah, I see a lot of people nodding their head. This is quite a popular chart. You see, if you buy a stock since 1824, it only goes up. So what if you end up halfway in the middle, like doing, there are certain years where you buy the peak. You hold your stock for 20 years before you break even again. No, I'm not holding any stock for 20 years, okay, to break even. But this is a very, very long-term chart. That's why this whole mindset is stuck in us. But probably we need to go to a different regime, and I'm going to guide you through each different regime on how do I come out with the conclusion or the outcome for your property investment and the kind of investments that I see that's available that's quite good to invest in. We'll try to discuss, from first principles, what is the eventual outcome? Because you need to realize there's different paths that governments will take. So these are the 5 different paths the government will take, and I'll go through each of them individually with you guys. So the first path to reduce this bubble from popping is reduce government spending. Do you guys think the government will reduce spending? Not a single, okay, who think they will? Who think they will? Not a single one. So there's no way the government will reduce spending. Next one, increase productivity. Means for, let's say, a 3-person's job can be done by 1 person. Yes, maybe. Actually, there's one company which I sold a while back ago. They might solve this. Have you heard of the Tesla robot, the Optimus project? Assuming it's working right now, technology, there's this S-curve function, and it takes many years to get it. This robot will start to do your housework, do cooking for you. You will change the whole economy as it is. But it's not a working product. But let's say if it's a working product right now, for them to scale to the whole world, it still takes 5 to 10 years. So this massive increase of productivity, it is not going to happen yet, right? At least for the next 5 to 10 years. So we have the third option over here. Default on government debt. You know what does this mean? It means the country declares bankrupt. Which is the most recent country that declared bankrupt? You guys know? Yeah, some quite close. Okay, Sri Lanka. Have you heard of it? Recently, Sri Lanka just went bankrupt. They couldn't buy their oil. So that's one option. Do you think the US would declare bankrupt? Nah, they're not going to do that. So we know that's out of the way. The fourth way is to inflate the way out of debt. So how does inflation, okay, why is this not going to happen? Because it's going to be very politically bad for people. What they essentially do is they print money to pay off the debt. But when you do that, right, you will get Turkey inflation, 100% a month kind of inflation numbers, like Venezuela kind of. So it is very politically bad. And of course, when you do that, asset price will just plunge.
We saw this inflating out debt in Turkey?
Yeah, Turkey.
Yeah, so I think the currency keep devaluing.
Yeah.
That's why there's a very huge movement in Turkey money outside of Turkey right now. It's happening.
Yeah, we talked to developers in UK, right? It used to be I think China, Singapore, Hong Kong, Malaysia are the prime markets outside of UK itself. And then Turkey emerged suddenly because of this. Yeah. So money is moving out of Turkey to invest elsewhere.
In Singapore?
No, in Turkey, money moved to invest in UK.
Oh, yeah. Okay. I thought they invest in Singapore.
Not yet. Still got ABSD.
And also these are moves that are not just a speculation, but they are done by multiple countries in different phases of life. For example, Greece, Venezuela had done before. And I think you're also very right that with the pride of US declaring bankrupt and going into hyperinflation of US currency is almost very detrimental for the world economy because it's so linked to the US dollar.
Exactly. Yeah. So we come to the only option left, which is called yield curve control. Yield curve control, if you want me to okay, let me say in a little bit of technical term, they try to peg the bond yields to a certain percentage. So if they want to stick it at 0.5% or stick it at 0%, the central bank will keep buying bonds to support the market as long as it's pegged at that particular number. If you don't understand what I just said, it's all right. You just need to look at Japan. Japan is the perfect example of yield curve control. That is where I see the US heading in some sort of, they will not be exactly like what Japan do, but they'll do it their own version of yield curve control. For example, BTFP, the Bank Term Funding Program, is actually another version of yield curve control, where they kind of put the balance sheet on another side. But anyway, you don't need to know that. But when you have a yield curve control, what will happen? So this is the next era of finance, at least for the next 10, 20 years that I see. So what's going to happen? There will be two kinds of inflation. Actually, we were talking about this yesterday. So you guys only know one kind of inflation, right? So there's actually two kinds of inflation going to happen. There's this thing called the high street inflation, and the second kind of inflation is called monetary inflation. So what's the difference between both of this kind of inflation? Number one, high street inflation is like the everyday coffee, petrol that you pump. It's going to be relatively subdued. In fact, next year, I think I see it coming down. It's like kind of like stabilized. The price has stabilized. So that's called high street inflation. Monetary inflation is where the money is made. And it's like a separate entity altogether. So monetary inflation is like gold, crypto, and properties. These are monetary inflation. Basically, you just look at Japan right now. What happened to the Japan stock market when they started their yield curve control back 30 over years ago? Their stocks have essentially remained flat, just all the way, even until today. But what happened to their property price? Went up, right? And if you peg the yen against gold has risen significantly for Japanese. You must understand. So this is the new era of finance we are in, and this is probably something that is not written in the textbooks. And usually whatever happens in the textbooks doesn't happen in real life. Right? Let's face it that way, right? So just to summarize, like what is going to happen in this yield curve control era is there'll be no more crash. As you saw, CG, one of the top banks in US failed and nothing happened. So what you're going to get is just dips along the way. Stocks will remain flattish. Growth investing, like those days I was doing my YouTube days, like, invest in innovation. That's all crap now, right? Because now when the cost of capital means interest rates will be roughly quite high, it's not going to go to zero anymore. Cost of capital affects innovation. So growth is kind of like dead. And sad to say, value investing, even you good value investor, right? You went to visit Warren Buffett.
Yeah, he went to Berkshire.
But he didn't see me, I saw him.
So actually right now you can see value investing taking over right now. If you look at the S&P 500, there's only 7 stocks that went up. They call the big 7. The rest of the S&P 500 is flat. Okay? So it's kind of sort of value investing takeover. So it's very, very particular few sectors that will work. And the odds of you choosing one of the 7 stocks in the 500 is quite low, right? So I will take less focus from there. Next, we will have selected properties that will go up. Gold and crypto will go up. Okay, so let me explain these two bottom parts over here. Okay, selected properties. Firstly, don't listen to me. They are the mastermind behind properties. They are good. You have seen their past results. Past results speaks for you. I mean, obviously, you got to look at people's past results to listen to them, right? So you can listen to them for properties, not me. But I can talk about gold and crypto. Okay, this chart over here, again, all these alpha that I have for you guys mostly are found on X or Twitter. I tell you, YouTube, full of crap, man. So when it comes to finance, so I stopped being part of that gang anymore. So anyway, when you look at this chart over here, and I think iQuadrant, you guys usually talk about liquidity and stuff, right? For this here, if you notice, the global liquidity is this, let me explain liquidity a little bit more. You talk about leading indicators. So what leads the market is industrial production, ISM, industrial production, and what leads all these leading indicators of industrial is actually global liquidity, right? So this is global liquidity, and gold and crypto is the best measure of proxy for liquidity. So like, for example, if gold moves $1, crypto will move 5 times, that kind of thing. So that's why since like 2022, end 2022, if you follow me on Twitter and some of my videos, at the time I was still doing some, I've been in at crypto for a long time, so, for a year, and it's been doing pretty well. It's been doing extremely well. So this is, so that's why if you notice, I don't have a laser pointer, but can you see all wealth, including gold and housing, over here? So you guys are in the right sector right now. So this is global liquidity. All this cross-border capital, they are the #1 place that you won't be able to get the information from him, like his weekly notes, because you need to be an institutional investor, but I usually will share his posts and kind of stuff. You can learn from this guy. So he's the #1 leading, he's the best guy on liquidity, and he actually called like the liquidity bottom. If you look at his charts, that's why I was super bullish at end 2022 to go into crypto. So this is the main reason. Next. Yeah. So in this whole sector of yield curve control happening in the US, this stealth yield curve control, where would you put your money? Because right now we are all trained to, money put in the States, put that kind of thing. So where would you put your money? Because would you put your money in a country like Venezuela? You won't, although it sounds cheap or what. I would say that instead of investing in US stocks, I would prefer the money to flow into crypto. You don't need to be like me buying shit coins and stuff, but you can buy the main one like Bitcoin and Ethereum. And if you want to park your money in certain countries right now, I think emerging markets are a pretty good place to park, like Singapore. A lot of money is coming to Singapore. It is nuts, the amount of money, especially now China with their thing happening in China right now. I know a lot of Chinese investors are moving up to safe havens. So UK is one of the places where it's quite easy to move cash there, and Singapore is one of those places. That's why you see our property price keep going up. COE price keep going up also is annoying. Yeah. Yeah, 150K, right? Or what is it? I don't even like.
There was a sudden drop from the last CEO bidding.
Huh?
Yeah.
Drop how much?
I think 50K. 50K.
50K for COE right now?
50K, no. From 150 drop to 100.
Oh, okay.
Yeah.
Oh, shit.
Time to buy another car.
No, it's still so expensive, what the hell? yeah, but maybe I might consider. Like a few cars looks good. So anyway, so emerging markets are a good place to go. Your mindset of investing in the US, right, has to kind of shift a little bit to more maybe a lesser portion towards there. So, and then, okay, this is my last slide. In the end, I talk so much, right? You got to have some kind of actionable plan. Obviously, first, everybody has different risk levels. Everybody has different wealth levels. So this is where I would say that if you have a relatively low, small amount of money, you take more risk, right? It's a very obvious math. And if you are in a 10 million pot like me or higher portfolio, you have to shift more away from, you can't be like me all in crypto, that's stupid. So I have some properties too. In fact, I got 10 in UK. It's not obviously not the different kind of properties, but so you will kind of diversify a little bit here and there. So this is kind of actionable plan for you. You got to adjust the percentage to your own risk levels, all right? And obviously you need to put some in properties too, because these guys, they grow their wealth consistently over time, annualized, 20, 30% a year.
Yeah. So let's talk about Japan. Because Japan seems to be your mirror model of what's going to happen in the US, but a less perverse version.
Yes.
A more curated version, right? So let's talk about that. So to summarize this. So in that perspective, how are you seeing what is similar and what is different? For example, in Japan, real estate continuously rise like mad, right?
Exactly.
However, everything else just go on almost deflationary model, right? Everything just like suddenly become affordable because of the yen issue, right?
Yes.
So what is similar in your perspective in US in the decade? What is different from what we are seeing in Japan right now?
What is similar?
Yeah, what's similar, what's different?
I think US is still the hub for like innovation and growth, like OpenAI and stuff, ChatGPT. The next innovation hub will probably be Dubai, which comes close to Silicon Valley. So US will not be a Japan, but it will somehow rhyme with it. So like for US, you could still buy some kind of stocks there, which will definitely rise. Like only like the big players will win. But it's going to be a very small sector. It's not going to be like 2020, 2021, where you see every crap-ass company goes to the moon. It's not going to happen that way. Yeah, that was an outlier.
Okay, and how fast do you see that happening? Because you say that there's no fresh crash, right? You say that, it will not happen like back in COVID days, whereby 30% gone, or back in a few years, right? So this is going to just stay constant, like where it is right now. And it's going to slowly go on a very slow path of like consistency of like flat market. Yeah,
it's going to be like, imagine you're Japanese right now, compared to the 1980s to now. I remember in my younger days, the Japanese are the ones traveling to Europe, spending a lot of money. I don't know if you guys remember those days.
Yeah.
And right now, they are not the ones doing that anymore. Right now, what happens? So you're going to get a miniature version of that where the people just feel poorer over time. And it's not the mirror again, it's just going to rhyme. Yeah.
I think there was an era, right, when we go to Europe, there was like Japanese translation on like price tags.
Yeah, not Chinese.
Then became Chinese.
Yeah,
now I don't see it.
So there will be a Singlish translation.
Bro, not enough population and need more babies.
So what will be your final advice for people? Of course, this is what Ken is doing. It's not a recommendation per se, but it's what Ken is doing in terms of his portfolio. So how do you think people should, what kind of spirit should you look at the market right now?
I think you got to have a mindset shift, and you need to be bullish on certain sectors. Like I see like you guys, actually me, you and Chewy, we bought a Bali property together. Yeah, so we were the first to go in, and we had a lot of pains along the way, and Chewy, she just kind of like dealt with it all the way and kind of find reliable people. So much pains doing so.
Everyone needs a Chewy in their life.
Oh yeah, I think so too. We all need a Chewy in their life.
I think also we were in a very unique space whereby half of commercial space was shut down in Bali. There was like, remember when there was barren land, it was ghost town, right? But that's what you do, right? Because you need to understand where the market is going, and then you want to catch it early, but not too early, because it sounds a little bit scary if you're too early like us. Like we are obviously too early.
And also one interesting fact, do you know that Indonesia is one of the least debted nations in the world? They have like one of the lowest debt ever. So I think emerging markets is a trend for the next 10, 20 years. In Indonesia, you could look at it. So, but the legal aspect for Singaporeans, we might not feel very comfortable. So we have to find ways around it to legally make it work for us. And
it took us a while, but we managed to get through corporate structure.
Yes, Chewy did it.
Chewy did it. Awesome.
I was just there to mentally support her.
Yes. With that, right, everybody please give a round of applause for Ken. Yeah. Thank you.